As of this moment, on Thursday, May 14th, 2026, at 1:59 p.m. IST, NVIDIA stock is trading at $225.83, marking a sharp intraday climb of 2.29% as it hits a fresh 52-week high. While the broader market seems to be holding its breath, NVIDIA stock has shattered the $220 ceiling with a level of volume that suggests serious institutional accumulation is underway. The immediate reality for anyone watching NVIDIA stock right now is a complete disconnect between what the skeptical crowd expected and what the tape is actually showing us. For months, the narrative surrounding NVIDIA stock was that the growth had to taper off, that the hardware cycle was peaking, and that hyperscalers like Microsoft and Amazon would start looking for cheaper alternatives. Yet here we are in the middle of May, and NVIDIA stock is not just holding its ground, it is actively expanding its territory. The anticipation of the upcoming Q1 report has created a curiosity loop that most investors didn't see coming. We aren't just looking at another earnings beat, we are looking at a fundamental shift where the B300 product line is performing with an intensity that even the most bullish analysts undercalculated. You might hear people talking about how NVIDIA stock is overextended or how the valuation is getting stretched, and that is a fair common ground to start from. However, when you look deeper at the institutional activity, the story changes. While the retail crowd is busy debating if they should use SoFi Invest or Robinhood to grab a few fractional shares, the big players are positioning themselves for a scenario where revenue doesn't just meet the $78 billion estimate, but potentially sails past $80 billion. This is the tension that keeps the smart friend awake at night. The expectation was a steady climb. The reality is an accelerating feedback loop. As more AI data centers come online, the demand for high-performance silicon isn't slowing, it is diversifying. When we look at the daily swings we've seen this week, it's clear that NVIDIA stock is acting as the gravity for the entire tech sector. If you are using Interactive Brokers or a Fidelity brokerage account to track these movements, you'll notice that the bid-ask spreads have stayed incredibly tight despite the volatility. This indicates deep liquidity, which is usually a sign that long-term funds are moving in rather than just day traders looking for a quick flip. The sector momentum is heavily skewed toward hardware right now because the software side of AI hasn't quite figured out how to monetize at the same scale. This puts NVIDIA stock in a unique position where it remains the only sure thing in the eyes of many fund managers. If we take a step back and look at what this company actually does beyond the ticker symbol, we find the backbone of the modern digital economy. NVIDIA Corporation isn't just a chip maker anymore, it's a platform company. They dominate the graphics processing unit market, which was originally for gaming but has become the essential engine for machine learning and professional visualization. Their business model relies on the CUDA software ecosystem, which creates a massive moat. Once a developer builds their AI model on CUDA, moving to a competitor's hardware becomes a nightmare. This is why even if you are into self-investing or looking for investment help through something like Schwab Intelligent Portfolios, the recommendation often leans toward companies with this kind of stickiness. Older reports from late 2025 showed some concern regarding export controls to China, and that is still a lingering risk. However, the company has managed to pivot towards sovereign AI projects in Europe and Japan, effectively replacing lost revenue with higher margin contracts elsewhere. The data center business now accounts for over 90% of their total revenue, which is a staggering transformation from just 5 years ago when gaming was the primary driver. Now, looking ahead, we have to talk about the catalysts. The transition to the Blackwell architecture is the big one. If the ramp-up goes smoothly and the yields at the foundry stay high, we could see gross margins stay in that elite 75% range. The risk, of course, is that any hiccup in the supply chain, specifically around advanced packaging, could gap the upside. We also have to keep an eye on the Rubin architecture, which is the next step in the roadmap. The market expects a seamless handoff, but the reality of semiconductor manufacturing is rarely that simple. Comment below how many shares of NVIDIA stock you currently hold or if you are waiting for a pullback before you enter. The future outlook for NVIDIA stock is a battle between the durability of AI spending and the eventual optimization of these large-scale clusters. If companies start to find ways to do more with less hardware, the parabolic growth might finally level off. But for now, the expectation of a slowdown is being met with the reality of record-breaking performance. Whether you are using Fidelity mutual funds to get exposure or trading directly on the Robinhood app, the central insight remains the same. The narrative of a peak is being challenged by the data of a new expansion. The contrast between the cautious expectations of early 2026 and the authoritative reality of today's price action shows exactly why this remains the most watched name on any trading platform. To bring it all together, the strength of NVIDIA stock isn't just about the numbers on the screen, it's about the technical dominance that makes those numbers possible. We've seen a 5-wave advance that suggests we are in a late-stage rally, but with analyst price targets moving as high as $320, the ceiling might still be a long way off. The authorities in the space are no longer asking if the demand is real, they are asking how long the supply can keep up. The shift from questioning demand to questioning supply is the ultimate sign of a market leader that has surpassed every expectation placed upon it. As you navigate your own individual brokerage decisions, remember that the volatility in NVIDIA stock isn't a bug, it's a feature of its high beta nature. Using tools like the SoFi trading platform or checking your Fidelity IRAs can help you see where this fits into a broader diversified strategy, but the focus will always remain on these intraday levels. The reality of a $5 trillion market cap was unthinkable 2 years ago, yet here we are watching the stock test new highs with a confidence that suggests the story is far from over.
Expectations were high, but the reality of the AI build-out is proving to be even larger in scope and faster in execution than anyone originally planned. This leaves us with a stock that isn't just a component of an index, but the index itself in the eyes of many modern investors. The authority with which NVIDIA stock is claiming this territory is a testament to its operational excellence and its ability to outpace its peers. While others are trying to catch up, this company is already looking toward the next generation of computing. The depth of their lead in both hardware and software ensures that any competitor will have to not just match their chips, but dismantle an entire ecosystem, a task that seems increasingly unlikely in the near term. This is why the authoritative take remains bullish, even in the face of macro windheads. In the end, we are left with a clear picture. The expectations for a cooling market have been replaced by the reality of a sector that is still finding its footing in a massive global transition. The authority of NVIDIA stock in this space is undisputed, and as long as the revenue continues to outpace the skeptics, the curiosity loop will keep drawing more capital into the fold. This is a moment where the expectations of the past are being rewritten by the reality of the present, leaving investors with a powerful narrative of growth that shows no immediate signs of stopping. Regardless of whether you prefer interactive brokers for the low fees or Fidelity for the wealth management, the movement of this single stock is the most important signal you can follow in today's market. By observing the institutional fingerprints on these recent trades, it becomes clear that the smart money is not selling the news, they are buying the future. The reality of the current valuation is that it is being supported by earnings growth that is actually faster than the price appreciation in some quarters, keeping the PEG ratio in a surprisingly attractive range. This is the ultimate reality exceeding expectation scenario that keeps a stock trending higher. As we look toward the close of the session, the authority of this move to $225 and beyond sets the stage for what could be an unprecedented summer of volatility and growth. The story of NVIDIA stock is the story of the market itself in 2026, and the depth of that story is only just starting to be fully understood. The authority of these moves is backed by a financial strength that is almost peerless in the tech world. With a balance sheet that could fund small nations and a profit margin that would make most industries blush, the company is in a position to weather any storm that comes its way. This is not just a stock for the bold, it has become a foundational asset for anyone serious about the future of technology. As we wrap up this analysis, the contrast is stark. The skeptics were looking for a top, while the market was looking for a reason to go higher. They found that reason in the B300 and the relentless demand of a world that is only beginning to understand what these machines can really do. Keep your eyes on the volume and the institutional levels, as they are the truest guides in a market where expectations are constantly being shattered by the sheer force of reality. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.